Okay, today in this video we're going to talk about Forex fundamental analysis and how interest rates and things like commodity prices determine the direction of currencies. So you can analyze any financial instrument, even if it's a stock or a currency or a financial market, with fundamental analysis. It definitely can be done. Stocks, bonds, commodities, mutual funds, or even currencies can you can use fundamental analysis to analyze that particular instrument. As far as Forex fundamental analysis is the study of the strength of a particular currency or economy, whether it's US dollar, Japanese yen, euro, a particular region. And if you know the fundamental indicators and all the economic and financial data for that currency, you're conducting a fundamental analysis. Another way to analyze a particular currency is using technical analysis. There's a lot of, you can learn more about technical analysis there. Technical analysis is in widespread use, but it's basically of no use to Forex traders. It's absolutely won't provide you with any information you need to trade the Forex market. So another method that you can use to I'm going to say analyze the Forex market is trend analysis. And if you look at the larger trends and time frames, you're essentially doing not technical analysis, but you're essentially doing a fundamental analysis, because the longer trends in time frames like the W1 and MN time frames are a function of the difference of the fundamentals of the two currencies you're looking at in any individual pair. So if you want to set up these inexpensive Forex trend indicators, these free trend indicators we have, you can click on that link right there. You can set up some simple trend indicators. Look at the larger time frames like the W1 and MN time frames, and you can figure out what the market thinks about that particular currency and that particular pair, and you could have weak versus strong fundamentals just by looking at the larger trends and time frames. Probably the biggest driver of currency prices, if you're doing Forex fundamental analysis, is interest rates, the current interest rates and the direction of interest rates. So for this particular trading system that we have 8 currencies that we follow. Okay. Well, all 8 of those currencies, we have this fantastic graphic here and link to a great website. If you click on this link right here, this goes to a website that shows you all of the current interest rates and the direction of interest rates. So look here, you can look for the US dollar or the Australian dollar or the British pound or the Canadian dollar. All the currencies that we follow, all 8 of them, you can get the current interest rate plus the direction of interest rate for the most recent change. That'll tell you pretty much all you need to know about all of the reserve currencies and what the fundamentals are of that particular currency. The next thing you want to look at, on some currencies, they're called commodity-based currencies. These currencies would be like the New Zealand dollar, the Australian dollar, and the Canadian dollar. These currencies are strength or weakness and fundamentals are based on commodity prices. So if you want to follow the price of gold or oil, those would start to correlate with these 3 currencies: New Zealand dollar, Australian dollar, and the Canadian dollar. These are called commodity-based currencies. So interest rates are huge, and also commodity prices on certain currencies. So let's apply what we know and apply it to a particular currency pair. This is the US dollar Canadian back in the 2012 to 2015 time frame. And you can see that the USD against the Canadian dollar, it moved a long way. It moved 3,000 pips over this time frame. And commodities were the main drivers and the fundamentals of the US dollar. The US dollar economy was strengthening and the price of oil was dropping on the Canadian dollar, which is a commodity-based currency. So you had a strong an economy strengthening in your base currency, and your cross currency was a commodity-based currency where prices were dropping. So this creates a perfect storm. You've got a massive long-term uptrend. Each one of these bars is 1 month. So it's like a 3-year upcycle in USD Canadian based on fundamental analysis. Great example of how you can take one strong economy and one weak currency along with it and convert that to a long-term trend. Now, if you're a trader, sometimes you don't necessarily need to know the fundamentals. For example, we have a signaling system called the Forex Heat Map. If you want to take a short, this is a real-time system. So right here you have a sell signal for the euro dollar against the Aussie. Well, this is an intraday drop. So if you want to sell the euro Aussie, even though the long-term fundamentals might be in the direction of buying the euro Aussie, it's okay to do that because you're a trader. You're just trying to maximize the number of pips that you're getting into your account. So short-term trading and swing trading against the fundamentals is fine if you're a trader, especially if you have a great trading system like this. So if the euro Aussie, all of the fundamentals on this pair point towards the euro Aussie going up, but it has a sell-off, you can still sell that pair and then turn around when it reverses back up, turn around and buy it again and trade the pair in 2 directions. When the USD Canadian went up, it had plenty of periods of time where it sold off for a few weeks. And there's some pretty big drops in here, easily plenty of 100 pip drops here. So you can actually sell a pair against the fundamentals, but eventually the fundamentals will catch back up. So if you're a trader, it's okay to trade against the fundamentals, day trading and swing trading, things like that. So remember, interest rates drive currency prices. Commodity prices drive some currencies, and strong against weak fundamentals will drive major trends and cycles like you see in the USD Canadian here. This is a very long-term trend. This is just a short-term day trade. Forex traders still need accurate trade entry points. You still need a great trading system and a great signal system so you can make pips on a day-to-day basis. So you can trade with the fundamentals or against them. So fundamentals are of limited importance if you're a trader, because you'll occasionally be trading against the fundamentals. And but if you're very strict, you can only, and if you see a currency pair that should be moving up based on the fundamentals, you can still trade the currency market in the direction of larger trends. Either way, you still need to have a great trading system and a great signal system. So this is Forex fundamental analysis and how it applies to traders. And this is part of our 35 lessons here at forexearlywarning.com.